Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well in the beginning of this week. If you do enjoy the content, please consider dropping that like and subscribe. As you know, it's the only thing that I ask, so thank you very much for your support. Now, what have I been saying? No, as long as the bond market starts to show signs of stabilization, stocks should, recover to some degree. Now, there are big earnings coming out. Those are always volatility period. Those always induce some volatility. I do expect actually some stocks to do very well. And this is going to be key because I would like to address something that I talked about at the beginning of the year. I said in the beginning of the year that two things mattered above all in this year. Number one was the Fed to signal stopping QT. Done. What happened? Stocks rallied a lot, in the first, let's say, 4 months, with the exception of these past 2 weeks. Number two, I would like to start seeing some real improvements in terms of productivity driven by AI. Now, that is something that will lead to a bigger impact in the medium term, not so much in the next 12 months, but we should start seeing some beginning or some signs that is indeed occurring, especially by half of the year, I would say would be the most important part. Now, all of this is obviously always subject to a big black swan event. Now, the reason why I was not so convinced about this black swan event with what was happening over there in the Middle East is because there was a lot of warnings going around. So basically everybody knew that one country was about to send missiles into another and all of this kind of stuff. And that's not how real black swans occur. When black swans occur is when everybody's trying to say that everything is right, everything is good, there's no problems in the world, this doesn't matter, that doesn't matter. That's how you get the real ones. Now, the fake ones are the ones that are basically here to drop some calm and some cold water in overheated markets. These I like to call the fake black swans. Now, the way that the system is poised right now, and I've said this before, in my view, stocks can have drops. Sure, nobody's arguing that risk assets will go only up every single day. Nobody's arguing that. What I'm saying is that there's a floor in the market, and that is very clear, driven by central banks. You see, even last year, with banks selling off or basically engaging in QT, the money supply still rose. See, this is something that's very important that I was supposed to talk in a different video, but I will talk about it today. You need to understand the difference between narrative and facts. This is very important. Narrative. Bitcoin will not have a bull market because interest rates are high and Bitcoin is a product of low interest rates. Narrative. Fact. Bitcoin never appreciated in price so quickly with high interest rates present. Fact. Very different from narrative. Oh, money printing will create a bunch of inflation, this is going to be terrible, blah, blah, blah. This is the narrative. Fact. The Fed's balance sheet went from 850 billion to 4.5 trillion with an average inflation of 1.6% per year. So this is the point. Be very careful with what people, with certain people's narratives. Okay, people like Peter Schiff that said, "Oh, the ETFs don't matter. There's no pent-up demand. That won't help Bitcoin." Blah blah blah. Next, it was okay. Now everybody's in. Everybody's going to start selling. Blah blah blah. Once again, narrative versus fact, and the key is there's a lot of narratives going around, and the reason why there are so many is because we are a content-driven society. Everyone needs to be looking at 100 things at the same time with an average time span of attention of less than 30 seconds. That's it. That's how media makes money. That's how social media makes money. That's how YouTube finance makes money. It's all the same. It's content, up to a point where they drum your head with so much information and contradictory information, one pulling up, the other one pulling down, that you get completely lost, and you just go buy their mastermind courses and all of this kind of crap, and you give them their money. That's ultimately the objective. Now, the key, in my view, and this is actually a real skill, is to, quiet down the noise and to understand what really matters at this stage. For us who are trying to make it, what matters is what will risk on assets, specifically crypto, do over the next 12 to 18 months. Now, if we do repeat a normal cycle, we should have the altcoin peaking by April 2025. Why April 2025? Because altcoins peak 12 months after the Bitcoin halving in every cycle. Now, Bitcoin is now more, if you will, manipulated because now it has the institutional money into it. But altcoins, for the majority, are not. So one thing that I think is going to happen is we're going to have a massive altcoin season up until April 2025, starting probably around the summer, like a real full-fledged one. And what I'm positioning for is that first altcoin season bubble. Now, last cycle, we had, for the first time, a double altcoin season bubble. But very importantly, not all the altcoins did well. Less altcoins did well. So all of them pretty much did very well in the first one. The second one was a bonus for a few. And what I'm trying to say here is I'm positioning myself in order to not need the second altcoin season bubble, meaning I should be well enough in the first one, so then I will have some, basically, let's say I would probably around a third of my portfolio left for the second altcoin season. And why? Well, because if the second altcoin season happens, once again, having 20 or 30% will carry me a long way if hopefully I've already did everything I wanted by April 2025. At the moment, will the cycle repeat? Difficult to say. One thing that I've seen different is in terms of timing, everything is pretty much in line with cycles. However, the Bitcoin price is indeed stronger than it should at this stage, and that was heavily driven by the ETFs. That is very clear. I think we have a lot of positive things for us. I think particularly when we really decisively break the all-time high on Bitcoin, I think that will gather a lot of interest from institutional participation, which basically, each institution has the money of millions of people. And so that will be, I think, the first, and that will lead into a first altcoin season blowout. What is the second difference? We should see Bitcoin go to somewhere between 45 to 52,000 until beginning of June. So this does not happen, overnight. This does not happen, halving today and then tomorrow, 38% down. But if we would repeat previous patterns, we would see Bitcoin retrace to about 45 to 52K. I would probably say 48 to 52K, which was the former breakout area. But maybe this drawdown that we had until 60K, maybe that was the halving sell-off from 74K to 60K. I don't think so yet, but that's a possibility. You see, because people were asking me when I was talking about the buy the rumor, sell the news event on Bitcoin, I was saying, look, by the way, 74 to 60K, that's about a 20% drop instead of the 38% classic drop. Maybe we no longer go down 38%, maybe we go down 20. What I said in this channel is, I think that's the most likely scenario. We go down to 52, 50K, 48K maybe, and we go back up. But what did I say? But maybe I'm wrong. Maybe this time there's enough buying pressure from the ETFs that stop us in the middle of the move. That's why I don't trade short term, because so to me, what matters is April 2025. Obviously, if we are in October and Bitcoin is 180K, I'm going to be a bit more careful, because most likely all my altcoins have exploded and maybe my goals are already achieved, and then I don't need to risk as much capital. That's perfectly possible. At this moment, it's not happening. So we're talking about maybe whatever, but that can happen. The point being, I don't pretend to know more than the market. I look at cycles, I look at what we're doing. 2022, 2023, pretty much identical to 2018, 2019. You could remove the chart, you could keep the chart, remove the price and the times, and you would put 2014, 2015, 2018, 2019, 2022, 2023, they were identical. Now a new variant came in, the ETFs. Timing of things was pretty much on point, but price action was much stronger. Difference, that's one. Number two, meme coin mania came earlier. A lot of people saying, okay, we know that meme coins will explode into the future. Let's go straight for meme coins and not wait for Bitcoin to decisively break the all-time highs. Different. Number three, so far, Bitcoin dropped to 60K, from 74 to 60K. That's a 20% drop instead of the classic 38% drop during the halving period. Will that be the maximum it goes down? I don't know. I don't need to guess, because I'm not short-term trading it. So I'm not trying to sell all my coins and then buy them cheaper because the cycle will repeat on this day like the other. No, I have a general feeling of where things are going. Even with the Bitcoin ETF, I think it's possible that altcoins will peak, or the majority of altcoins will peak 12 months after Bitcoin halving, meaning April 2025. Will there be altcoins that will do all-time highs after that period? Sure. But you'll see that's not going to be, 80% of them. Maybe it's going to be 40% of them. My point being, the altcoins are still much more pure, much more untouched than Bitcoin itself due to the ETFs. One of the keys that's going to be for this cycle will be the Ethereum ETF. And I do think it's likely it's going to happen. It already happened in Hong Kong. BlackRock has filed for it. We all know about the percentage of success when BlackRock files for something. And if that happens, I think it will lead to the explosion of altcoins. Why? Because altcoins are nothing more, nothing less than leverage on Ethereum. That's it. Ethereum does extremely well. And the reason is actually quite simple. The majority of coins have their liquidity paired with Ethereum, meaning they are interchangeable with Ethereum. So if one side of the equation goes up, the other one moves higher as well. Goes up more and goes down more than Ethereum itself. Now Ethereum has been struggling, as it's in its cycle 3 curse. I've been talking about it, for like 9 months now. But I still believe if we do have the Ethereum ETF, I would see Ethereum go to 25K, maybe 29K by the end of the cycle. Point being, I don't see still any reasons why we're not going to go into 2025 very strongly. So to me, as I've said before, 2025 is the key. Did we do something different this cycle? Did we stop at 60K instead of 52K or 48K or 50K that I was expecting? Maybe. Is this going to impact me? No, why not? Because I'm not short-term trading. I'm thinking what I've been saying since 2023. I started buying very aggressively 2022 and 2023. Starting it. 2025. Oh, but this is going... 2025. Oh, but the ETF... 2025. Oh, but the missiles... 2025. That's it. I don't care about... Now, what I was trying to say is, think about it, because there may be an opportunity that some of these things will be cheaper around the halving if we do have the sell-off. That's what I said. My case, I'm already positioned. So if that happens, good, great, I'll head more. If it doesn't happen, I'm fine. That's the key. And I don't pretend to be smarter than the market. I look at it and I try to derive the conclusions in the middle of the noise. Example, if bonds stabilize, stocks can go up. If bonds destabilize, stocks can go up for a couple of days but will come down. What happened of this big stock market correction? Bonds sold off aggressively in short periods of time, very volatile. What happened to stocks? Dropped 6-7%. Gold held up. What's happening to gold? Selling off. Same thing. I said it before. If bonds stabilize, they can stabilize at lower levels, but they need to stabilize. They cannot be jumping 1.5% to 2% up and down. No, that doesn't work like that. Now, if it jumps to the upside consistently, that's better. But again, bond market gives you the room temperature. You don't want it very cold, but you also don't want it too hot. If it's too hot, you're in the middle of a huge sell-off, huge deflationary event, and bonds go up. Like the zombie virus, like 2008, bonds went through the roof, everything else collapsed. But if bonds are also getting too cold, it's too much uncertainty, too much volatility in the market, you start having liquidity shortages. There's no liquidity within pairs, so things jump up and down quite aggressively. You get locked in the middle, then the leverage of the system starts getting out because of all these short-term movements that take out leverage positions, etc. And then things can become very tumultuous. Then we can stabilize at lower prices or at the higher prices, but we stabilize. Stocks then can go up. But once again, we are in the middle of earnings season. Keep that in mind. I do expect to see some very good achievements in certain companies. Let's see, particularly the ones related to AI. Let's see if I'm right. Thank you very much, guys, and I'll catch you in the next one.